There has been a lot of talk lately about the dollarization, which means efforts to reduce the US dollar's role in the global financial system. This trend has been reflected in the recent decline of the US dollar index, which measures the dollar's strength against other major currencies. At the same time, US politics haven't exactly been inspiring confidence, with tariff threats, debt ceiling standoffs, and policy U-turns adding fuel to the fire. Meanwhile, the rise of alternative currencies like the Chinese yuan and the growing popularity of cryptocurrencies have raised serious questions about whether the US dollar is losing its dominant position. So, is the dollar really collapsing like some media and foreign governments claim? And if it is, what does that mean for the US and the world? This video will explore the dollar's rise from the World War II era to today and what challenges it may face in the years ahead. The US dollar hasn't always been the world's reserve currency. From the 1500s to the 1700s, that role belonged to the Spanish silver coin known as the real. As global trade expanded, along with the reach of Spain's colonial empire, the real became the standard currency across continents, even reaching places as far as Japan. In the American colonies, it was known as the Spanish dollar, and it became the most trusted currency in early cities like New York. The coin gained popularity during a time when Europe's economy was booming and demanded heavier, more valuable silver coins. In 1728, Spain's Bourbon dynasty introduced a new version, the Real de Ocho, or Piece of Eight, which soon became the most widely used currency in the world. When the US gained independence and began minting its own currency in 1792, it modeled the US dollars on the Spanish coin. Even the dollar sign is believed to have been inspired by the Pillars of Hercules wrapped in a banner, a key symbol on the original Spanish real. But over time, as the British Empire expanded and industrialized, the British pound overtook the Spanish dollar as the world's dominant currency in the 19th century. For much of that era, London was the center of global finance, and the pound sterling was the currency of choice for international trade. Until a new global order emerged after World War II, with the US dollar stepping into the spotlight. While much of the world was devastated by the two world wars, the US emerged relatively unscathed and economically stronger. This positioned the US to lead the restructuring of the post-war global financial system. In 1944, representatives from 44 countries gathered at the Bretton Woods Conference to establish a new international monetary order. Their aim was to prevent the economic instability that had followed World War I, marked by the collapse of the gold standard, the Great Depression, and protectionist trade policies that deepened the crisis. The US dollar was chosen as the central anchor of the new system, backed by gold at a fixed rate of $35 an ounce. Other currencies would be pegged to US dollars, placing the world on a dollar-based gold standard. This arrangement was possible in large part because the US held around 20,000 metric tons of gold, by far the largest reserve in the world, representing about 2/3 of all official global holdings. The conference also led to the creation of key global institutions, including the International Monetary Fund and the International Bank for Reconstruction and Development, now part of the World Bank Group. However, this arrangement didn't last long. By the late 1960s, the US was running large deficits driven by the Vietnam War, foreign aid, and ambitious domestic programs under the Great Society. At the same time, it was printing more dollars than it had gold to back them. But remember, under the Bretton Woods system, this dollar was pegged to the gold at $35 an ounce, but the growing imbalance made the dollar increasingly overvalued. Foreign governments, especially France, began demanding gold in exchange for their dollar reserves, triggering a steady drain on US gold holdings. Despite efforts to defend the system, confidence collapsed and currency markets braced for a reckoning. On August 15, 1971, President Nixon suspended the dollar's convertibility into gold. The move, later called the Nixon shock, officially ended the gold standard and dismantled the Bretton Woods system, ushering in a new era of floating exchange rates based on supply and demand. It's worth mentioning that economist Milton Friedman believed that fixing the dollars to gold and then having other currencies fixed to the dollar created artificial imbalances. He thought this system was inherently unstable because it forced the US to run deficits to supply dollars to the world, which would eventually undermine confidence in the dollar itself. Still, even after the gold standard ended, the US dollar didn't lose its dominance. It actually became stronger. The world still needed a stable, widely accepted currency for global trade, and the US, with its large economy, deep financial markets, and strong institutions, remained the most trusted player. In the 1970s, the dollar found a new anchor: oil. The US struck deals with Saudi Arabia and other OPEC nations to price oil exclusively in dollars. This created the petrodollar system, which meant countries needed US dollars to buy energy, boosting global demand for the US dollars again. While the petrodollar system reinforced global demand for the dollar, it was only part of a bigger picture. Ultimately, the dollar's dominance stems not just from oil deals, but from the broader foundations of the US economic and geopolitical strength. The US dollar's global popularity doesn't depend on the goodwill of oil exporters. It's based on the US status as the world's largest economy and goods importer, with deep, liquid capital markets backed by the rule of law and military power. Today, the US dollar is still the lifeblood of the global financial system. Roughly 58 to 59% of all central bank reserves are held in dollars, far ahead of the euro, which is around 20%. About 54% of global trade is invoiced in dollars, even when the US isn't directly involved. And when it comes to foreign exchange markets, a staggering 90% of all currency trades involve the dollar. It doesn't stop there. Most major commodities, such as oil, gold, wheat, copper, are priced in dollars. And globally, about 64% of all external debt is issued in the US dollars. That means countries, corporations, and entire economies depend on the dollar to trade, borrow, and do business. So even without a gold standard or formal empire, the dollar still rules, not by force but by function. So what does the US actually get from having the world's reserve currency? For starters, it can borrow money on the cheap. Global demand for US treasuries keeps interest rates low, even with massive deficits. Second, foreign investors pour money into US stocks, bonds, and real estate, keeping American markets strong. Third, since most global trade happens in dollars, the US has leverage. It can sanction, freeze assets, and influence others without using force. Fourth, the US can import more than it can export because it pays in its own currency, a luxury most countries don't have. And finally, the US can print money and other countries absorb the inflation. America spends more while the rest of the world shares the cost. Milton Friedman acknowledged the dollar's dominance but saw it as a product of convenience, trust, and US economic strength, not something that was guaranteed forever. He argued that the dollar would remain dominant only as long as the US maintains sound economic policy and others don't create more attractive alternatives. In summary, the dollar is dominant because there is no better alternatives, not because it's perfect. So, if the dollar is still the king, who are the rebels plotting against the throne? Recently, the US dollar index, a key measure of the dollar's strength, dropped to its lowest level in nearly 3 years. At the same time, something bigger is unfolding. A growing number of countries are starting to pull away from the dollar in trade, finance, and foreign reserves. This trend, often called de-dollarization, isn't just economic, it's political. After the US hit Russia with heavy sanctions in 2022, other countries took notice. Nations like China, Iran, and Russia saw just how much control the US holds through the dollar and began building workarounds to avoid that risk in the future. From local currency trade deals to new payment systems, the shift is already underway. Start with Asia. Many Asian economies are now settling more trades in local currencies. In 2023, China and Brazil agreed to settle trades in yuan and reals instead of dollars. China also buys oil from countries like Russia and Iran in yuan, not dollars, a move meant to reduce exposure to US sanctions. China is pushing the yuan globally through initiatives like Belt and Road. While the yuan still makes up just 2 to 3% of global reserves, its role in cross-border transactions is growing fast. Then there is the euro. It's the second largest reserve currency, holding about 20% of global reserves, but its ability to challenge the dollar is still limited by internal issues like fragmented bond markets and periodic eurozone crises. The BRICS countries, Brazil, Russia, India, China, and South Africa, have also openly discussed reducing their reliance on the dollar. In 2023, Brazil's President Lula even called for common BRICS currency to boost trade independence and reduce vulnerability. While a unified BRICS currency is unlikely in the near term given the economic and political differences between member countries, they are already trading more in their own currencies and exploring alternatives like the yuan or even gold for settlement. Finally, digital currencies like Bitcoin and stablecoins have also been floated as alternatives to the dollar. While they are not replacing national currencies anytime soon, they represent a growing challenge to the traditional system, especially in countries facing inflation, sanctions, or banking instability. So where does all this leave the US dollar? Well, there isn't one clear ending, but there are a few possible paths. One likely outcome? No single currency replaces the dollar, but instead we shift to a world where multiple currencies share the spotlight. In this future, the dollar might still be dominant, but its share of global reserves could fall from around 58% today to maybe 40 to 50%. The euro, yuan, and even other regional currencies like the Canadian dollar or Indian rupee could take on a bigger role. Think of it less like a king losing the crown and more like a round table of currencies, each with influence. This currency multipolarity would reflect a more distributed global economy with no single currency calling all the shots. And historically, this kind of transition has happened before. The British pound once ruled global finance, but by the mid-20th century, it slowly gave way to the dollar. These shifts don't usually happen overnight. It's more like a slow glide, not a sudden fall. Now imagine a future where faith in fiat currencies weakens and countries turn back to hard assets. We're already seeing signs of this. Central banks are buying gold at record levels, and gold now makes up around 10% of global reserves. Some analysts believe gold could be the big winner if trust in the dollar erodes. There's even speculation about commodity-backed currencies, like an oil or gold-backed BRICS currency. It's still theoretical, but the idea is simple. If you can't trust central banks to protect the value of money, maybe it's time to go back to something real, something physical. This wouldn't mean a full return to the gold standard, but it could lead to a hybrid system where gold or a basket of commodities plays a much larger role in the global financial system, especially as digital tech makes it easier to track and trade these assets. Then there's the most likely and most overlooked outcome. The dollar stays on top, but with caveats. If the US can maintain economic stability, avoid major debt crises, and uses its currency power responsibly, many economists believe the dollar will remain as the world's preferred currency for a long time. After all, no other country offers the same mix of financial market depth, legal transparency, and geopolitical influence. But if the US stumbles, if it faces debt defaults, government dysfunction, or alienates allies through overuse of sanctions, the world might accelerate its search for alternatives, because ultimately, the dollar's dominance isn't just about competition, it's about confidence, and confidence depends on how the US manages itself. So, in summary, the global monetary order is still evolving. The dollar isn't dead, far from it, actually, but it's no longer untouchable. Whether it holds the throne or shares it depends on a mix of global ambition and domestic discipline. And that story, well, is still being written.